Today, the federal government announced that they will cancel up to $20,000 of student loan debt for some borrowers. However, most people would agree that widespread loan forgiveness is at best a temporary solution to the student loan crisis. Further reform is required to make the student loan system better. Thankfully, also announced today is a proposal to improve the student loan system, which is what this video focuses on. First, the proposal would reduce minimum payments under income-based repayment plans to 5% of the borrower's discretionary income from the current 10%. It also reduces the amount of time that a borrower on these plans must make payments before their loan is forgiven, down to 10 years from the current 20, with some caveats. The big change, though, is more than just making a number smaller. Right now, it's possible for many borrowers to pay their minimum payments every month and yet have the amount they owe go up, as their payments are less than the interest that accrues in that month. Under the new proposal, so long as they pay their minimum payment, the federal government would cover any remaining interest. There's no non-confusing way to word that, so here's some examples to make it clearer. Our first example is Alice. 5% of her income is greater than the interest her student loans accrue in a month. She makes her minimum payment, which goes to cover all of the interest that has accrued since her last payment, as well as some of the principal. The only thing that changes under this proposal for Alice is that her minimum monthly payment goes from 10% of her income to 5%. Our second example is Bob. 5% of Bob's income is less than the interest on his student loans, but it is still his minimum payment. Normally, this would mean that Bob could make his minimum payment, but that the amount he owes would continue to grow due to that interest. Under the proposed system, the federal government would pay what remains of Bob's interest. The amount he owes still wouldn't go down, but it wouldn't go up either. Now, there's still a lot that's unclear here. For example, what if Bob pays more than his minimum payment? Does his extra payment go towards the principal of his loan and reduce what he owes? Or does the federal government simply pay for less of the interest? Right now, nobody knows. At press time, this was still a proposed change with many specifics up in the air. If it's implemented, the proposal could improve the lives of both those who currently hold student loans, as well as those currently attending or who have yet to attend college.